Yes, hello. So we're just live. So it's Sarah Harding from WI Advice and
I'm Anthony Landahl from Equilibria Finance, and I think this is our third budget review that we've done together, looking at the budget. So what we're going to do is we're going to provide a little bit of an overview of how we've seen it, dive into a couple of the topics that are specific to some of our clients from an advice and a finance perspective, and then have an opportunity for any questions as well if anyone's got any along the way. So I'll just kick off with a bit of an overview and then get your view on how you saw it. So look, first thing is, this is just a general discussion. This is not advice. We'll touch on areas that may impact you personally, but we're not providing specific advice. So I think the overview start point is that this is obviously a delayed budget in response to COVID-19, and the underlying assumption around a vaccine being produced by the end of 2021 obviously had a massive influence on the budget. The focus has shifted from moving back into surplus to now having a deficit of around $213 billion this year, and over the next 3 or 4 years that'll build back towards about a $60 billion deficit. An interesting point on that we observed was while the actual debt is growing, the interest bill is not actually growing exponentially like that because of the low interest rates at the moment. But I think at the heart of this budget was we're seeing a budget that's around trying to get people, small businesses, individuals out there spending and stimulating the economy. So this budget seems to be more around stimulating the economy with some of the initiatives, as distinct from taking the opportunity to do major reforms to some of the underlying elements to our economy. It was very much around stimulating the economy, individuals as well as small businesses, to get out there, help the economy recover and provide some expenditure within the economy, as distinct from taking the opportunity to look at any major reforms. How did you see the main areas of the budget building on the back of that sort of overview philosophy?
yeah, well, I think watching the budget last night, it was one of the first budgets I've seen with such a broad depth of announcements in different sectors of the economy. So I think what underpinned most of the announcements last night was the fact that the government is trying to get people back into the workforce, back into jobs. Like you said, we're seeing a lot of incentives around trying to get businesses to invest into their business and start spending money to be able to grow again. And, we're seeing tax cuts as well for, I think 99% of people are going to be receiving a tax cut, which is backdated to July this year.
Yep.
Which will be good, seeing as, people are struggling at the moment and times are tough. But yeah, we just saw a broad depth of announcements, which, are going to impact a lot of different sectors. Lots of, announcements around the energy space, gas exploration, money for the environment as well. Women who have been heavily impacted, through COVID. There's obviously been a focus on an announcement for them as well. But there was just such a broad depth of announcements for each different sector, which, was just great to see.
Probably the 5 key takeaways for me that I took from it were, which you touched on a couple, but more specifically with the tax cuts for around 11 million Australians brought forward to 1 July. What that actually means in real dollars is, if, for example, you earn $50,000 a year, that'll be about $1,080 back in your pocket as an individual. If you earn $100,000 a year, that'll be about $1,530 back. If you earn $150,000, it'll be about $2,430. So the tax cuts were a big one, obviously, for personal and individual. The new job maker scheme, which is essentially building on JobKeeper, which is obviously phasing out and focusing on hiring credits for apprentices and specific criteria around how that actually works, where you can't replace staff, it's got to be new staff, and you get a credit. There was a big SME focus. The extension of the instant asset write-off is a big one to stimulate the economy and investment by small business, as well as the loss carryback, which will essentially allow businesses who have made losses in the past to now declare those losses before they're profitable again. The fourth one for me was, obviously there were some big home care packages to support the aged care area, as well as infrastructure. You touched on some of the infrastructure, but there's a concept, or the idea of this use it or lose it infrastructure spending, where the funds will be made available to the states for them to use. If they don't use it, it'll get reallocated to other projects. So they were the 5 big ones for me, with the personal tax cuts, the business stimulus through the instant asset write-off and the loss carryback, the job maker for your hiring credits of apprentices, home care packages, and your infrastructure spending.
They also touched on super as well. So they did announce some superannuation reforms, which will had a brief look in regards to it, and it will touch on the default super, which if you set up a new super fund and you don't really allocate how you want to invest that, often people end up in default super funds or my super products,
paying lots of fees.
Exactly, yeah. So there was an announcement on looking at how much fees versus what the performance of these funds actually are. So waiting on some more information in regards to that, but I believe super funds will actually be scrutinised now if they are charging high fees and they're not performing. And they're I think I read somewhere to say that if these types of super products aren't performing, they won't be allowed to have new members on board. So it's just building in some more accountability and transparency in regards to these super funds.
From your perspective, what's the reaction been of your clients, or where do you think a lot of the focus was on stimulus and spending, as distinct from, you touched on a little bit of super, but there weren't any major structural reforms around superannuation or some of the wealth management space. Where do you see the biggest impact for some of your clients as small business owners, as individuals out there who...
Well, I think, I was thinking about this after the budget, and I think it's not an issue, but it's a big thing that's driving where we are at with the economy, is the fact that our cash rates are so low. So I did a review recently for a client around looking at some cash options for security, because there is a lot of uncertainty at the moment, and there has been in the markets, and there are just no options anymore. I'm seeing cash rates at under 1%. So just say, for example, you're lucky enough to have a job at the moment, because not a lot of people are that lucky. So if you are earning an income, your income is actually becoming worth less and less. Yep. So I think the government is trying to incentivize people to start investing this money, and it's a good thing to do, seeing as there's no alternatives. So I think a lot of that is driving kind of where we're at.
Yeah, well, it's interesting as well. There is talk of, even from the RBA, around what they're going to maybe re-looking at cash rates, whether they're even going to lower the cash rate even more. And obviously November, we've got another RBA meeting coming up. We've got the election over in the US. So there's quite a bit of activity happening around that time. And all with interest rates already at record lows. It'll be interesting to see how that may play out over the next month or so when the budget reality sort of settles in, obviously knowing that most of this still needs to be legislated, with also November's RBA meeting and the US presidential election all around Melbourne Cup time. It'll be an interesting first week in November.
Well, exactly. Look, I think from my perspective, from where the markets are at the moment, something that I've seen over the past year since COVID hit is, lots of people are jumping into the markets. People that haven't been in the markets before are jumping in because they can't get the same returns in cash, and there's no real alternatives at the moment. So you've got these investment platforms that have been set up, like the Robin Hoods over in the US, where people aren't getting charged phenomenal trading costs. So they're jumping in, they're investing, they're learning as they go. But a lot of these investors, I don't think, are following the fundamentals of the actual companies they're investing into. They might not have the knowledge. B, they might just need to take the risk and accept, whatever rewards they possibly get. So I think a lot of that is actually impacting the investment markets at the moment, because, we're seeing prices that aren't in alignment with traditional fundamental, valuation metrics. So that in itself is, causing the markets to be very volatile, and that's obviously leading to a level of uncertainty at the moment as well.
Yeah. Another area, just from our perspective with our clients, with the finance perspective, is there's been a lot of initiatives to try and stimulate the housing market. We've obviously seen Home Builder, we've seen the First Home Super Saver Scheme, we've also got the First Home Loan Deposit Scheme. So the government announced last night that that's going to be expanded to another 10,000 places. It's been very popular, that scheme. There's waiting lists with some providers. Some providers have ran out of places. It's very popular amongst helping first home buyers get in the market. And we are seeing a lot of younger home buyers trying to get in the market at the moment. So they're going to allocate another 10,000 places. and they'll probably become available around late October, early November. They'll get allocated to the lenders. So that's a good one to keep an eye out on, and that's a constructive way to help home buyers get into the market. I guess from a property perspective, the other sort of the other areas they looked at a little bit was removing capital gains tax for granny flats, and also trying to encourage construction for low-cost housing and Indigenous home ownership programs. But probably the main one around that was the extension of the first home loan deposit scheme, noting as well that the home builder program and a couple of the other COVID initiatives are still in place as we go through as well.
Yeah.
So from a small business perspective, what did you think of the extension of the instant asset write-off program and the loss carry forward in terms of businesses being the loss carry back in terms of businesses and how they can treat their losses?
Well, I think they're all very positive measures that are being introduced. I'm interested to see, because I know it's on eligible investments or assets. Interested to see what is deemed to be an eligible asset that you can purchase. I think we're waiting on further guidance in regards to that, but I think that will have a really positive impact on getting businesses to start investing back into themselves to I guess change and grow. But that, as well as the incentives that the government are giving small businesses to hire younger people as well. So I think it's $100 if you hire $100 a week if you hire somebody up until 30, and over $100 after, $200 between 30 and 35. So I think that's really going to help people who may have just graduated from university. They're really looking to get into the workforce, but they're not finding a lot of opportunities at the moment. That incentive, I think, will assist businesses to for me, for example, I'd definitely be interested in hiring somebody younger because I'm getting incentivized to do so. Than maybe someone a bit older, but I think it will just all help at the moment because a lot of businesses are strapped for cash, and they're watching kind of every dollar they've got.
Well, I guess it'll sort of tie in with the end of the JobKeeper program and encouraging jobs and people and businesses to reinvest in their business. And there's also obviously the other SME incentives. So hopefully that they're essentially trying to help get businesses back on the road.
But I think one thing to take note of the changes that have occurred over the past 8 months or so is the change to the digital economy. So I think some of the biggest paydays that I saw through COVID were in the technology space. Lots of the valuations in the tech space have gone through the roof. So obviously we've seen a bit of a pullback now in terms of that, but I think there was this shift in businesses towards looking at technology that they're using within their workforce. A lot of businesses have shifted to working from home because they're thinking, well, I was doing exactly what I'm doing now, but I can do that at home with the technology that we've now got. So I think that's one thing to take from COVID. Now, whether or not those trends or those habits remain longer term is something that we have to wait and see. But definitely there's been a shift in, the way people are working and communicating. So
yeah, absolutely. So look, I guess the budget was all about stimulating the economy, trying to get people to spend money, trying to get businesses to spend money. As we touched on before, there wasn't massive structural reform. Was that a lost opportunity? I guess we'll see as things evolve.
Just trying to get that confidence back in the economy so that people have some level of certainty, I think, to start wanting to, invest back into their businesses, invest back into the markets, invest and, continue to grow versus,
Absolutely.
But I think we're still going to be in for a bit more volatility and uncertainty. Nobody knows what's going to happen with the US election and what impact that's going to have. From the connections I've got over in New York, I think a lot of people on Wall Street are expecting Trump to get reelected. They're not pricing into the markets whether or not Biden will get elected and how that, how things are structured. So I think it's just going to be a matter of waiting and watching to see what actually happens. And the impact that does have on the financial markets, because as you'd possibly know, a lot of what happens here in Australia is a reflection of what's going on in the US as well. So there is always that flow-on impact that we have to be mindful of.
Yeah, and I think as well back to, I guess, part of that uncertainty is one of the key underlying assumptions to this budget was was a vaccine by the end of 2021, and obviously if that's brought forward, that'll have a big impact on the numbers, and if that's pushed back, that'll have a big impact on the numbers as well. And another key assumption was around the net migration rates and the timing of all that, and the bringing money back in for education and tourism. So interesting to see how it all plays out. Interesting to see what happens over the next little bit of time, and as people digest this more. And obviously, from your point of view and mine, if there's any questions or follow up about how it may impact them, particularly around the wealth management or the finance space, please contact us.
We're here to help. Great. Okay, so if there's no other questions, somebody said we're interesting. Oh, thank you. If there's no other questions, we'll wrap it up for today. But thanks for your time, Anthony. It's been really enjoyable discussing the budget with you.
Thanks, Sarah.